Jaspreet, what's the most dangerous money lie we're taught that keeps 90% of people broke for life, and why does no one ever question it?
I think the biggest money lie is not really a lie, it's a belief that if you just follow the system that everybody tells you, you're going to become wealthy. And this has unfortunately kept so many people stuck in what people call the rat race because we are taught to go to school, get good grades, get a good job, and then ultimately work to climb the corporate ladder. But that's not how wealth works, and that's not how wealthy people think. I grew up in a traditional Indian household, and my parents came to this country with very little, and they told me, Jaspreet, we want you to become successful. So, Jaspreet, you have two options. They said you can either become a doctor or you can become a failure. You pick which one you want to do. So I wanted to become successful and give back to my parents. So I studied hard, thinking that I was going to become a doctor. But along the way, I started reading books about investing and business and entrepreneurship and finance. And I started seeing a trend that the wealthiest people in America didn't get there by following that traditional path of getting a good job. They got there because they owned assets. Now, if we look at the wealthiest wealthy people, many of them created a business, but you don't have to create a business. And so I started to really question how this system worked because we're taught to become employees, we're taught to become consumers, we're taught to go to school and get a job and sell our time for money. And then we're taught to spend that money. But there's a disconnect because what wealthy people are doing is they're taking their money and they're becoming owners of an asset. They're becoming owners of investments. And that's the part that we're never taught. We're never taught to become owners of assets. So then people start talking about how it's bad to be an employee, it's bad to work a job, you're just making other people rich. But the problem isn't that you're working a job. That's not a bad thing. The problem is we're never taught what to do with the salary. We're never taught how to use our money. So for the average person, we make money, we spend money, and then we have no clue where all of our money went. We have no savings and investments. But the way wealthy people and the people that become wealthy do it is you work to make money. Whether it's your job or your business, it doesn't matter. You work to make money. You don't spend all that money. And then you take what you don't spend, you save some, but then you invest it to become an owner. And now, when you become an owner, you're working to own assets, you're working to own investments, and these investments can pay you when you're not working. See, if I went out and I bought a BMW when I was 20 years old, like I really wanted to do, that BMW wouldn't put any money in my pocket. That BMW would have cost me money every single month, and then ultimately I would have to get a new car because BMWs, we all know, don't last that long. But what I ended up doing was I started investing my money. And the investments that I made are still paying me today because I still own a lot of them. And they continue to put money in my pocket. And so the name of the game is owning assets, working to stack assets, working to build the wealth. And it all starts with you not spending all of your money. Now, I'm going to take it one step further here, which is when my parents found out that I wasn't going to become a doctor, they were very angry. And so my dad essentially made a compromise with me. And he said, Jaspreet, if you want to keep any pride in the family, you have to at least become an attorney. So I said, okay, I'll do that. I'll go to law school because I know I can go to law school part time or working on my business full time. So I went to law school. I became a licensed attorney, but I never worked as an attorney. But one of the things that I found very interesting in law school was I learned about this concept of fiduciary duty, specifically in the corporate world. And the way it works is the CEO of a company, the leader of a company, has a fiduciary duty to make one person rich. It's not the employees, it's not the customers, it's the shareholders, the owners, the investors. And this is that part that, again, we're never taught. And now it all really started to make sense. You are working at a job, working to drive profits to make the owners rich. But we're never taught to become an owner. We're never taught to become an investor. And this is that lack of financial education that keeps so many people stuck is we just don't understand the game. It's all a game. And when you understand this now, you can start using your money differently because you need to work to become that shareholder. You need to work to become that owner. You need to work to become that investor. And it all starts with you not spending all of your money, and then you building a financial education. That way you can become an investor. Long answer to a short question.
Yeah, and I think the problem is people they take on all this debt, they get out of college and they're just smothered in debt. And so my next question is like if somebody is living paycheck to paycheck and wants to build wealth faster and see progress in their life, what should they do with their next paycheck and every paycheck after that?
Well, there's no secret sauce or golden ticket. I mean, I guess you could try to play the lottery, but you're probably going to lose. I don't recommend that. But at the end of the day, there's only one thing that you can do. If you're living paycheck to paycheck, the first thing you got to do is you got to get your spending under control. And when I say that, the first thing you're probably going to say is, Jaspreet, you're an idiot. I'm already spending all of my money. I have no money left over at the end of the month. I'm barely getting by. How do you want me to spend less money? And here's where you will ultimately have to make the decision for yourself. Because the reality is, it's not going to get easier next year. It's not going to get easier 5 years from now. And it's definitely not going to get easier 10 years from now. But the formula doesn't change. The formula is you have to spend less than what you make and you have to invest the difference. If you want to become wealthy, there's no other way. So if you're spending all of your money, you really only have two options. You can spend less money or you can work to earn more money. So how do you spend less money? Maybe you downsize where you live. Maybe you downsize what you drive. Maybe you downsize what you wear. Maybe you downsize something that you're spending your money at. And the best way to figure that out is to create a spreadsheet and write down how much money you're making and then write down every single expense that you have. It's tedious, but I would recommend you do this every single month. At the beginning of a month, look at the previous month's income and all of your expenses, write them all down, and now you can start to see how much you earned, where you spent all of your money, down to the penny. How much money did you save? How much money did you invest? How much money did you give to charity? And now find ways to shrink that. Then you also focus on the other side. How do you earn more money? Now, maybe this means you work to take on some extra shifts at your job. Maybe this means you take on a second job. Maybe this means you take on a side gig. Maybe this means you work to find a new job. Maybe this means you find a new certificate. You get a certificate to find a new career. Maybe this means you start a business. I don't know, because what's right for you is different than what's right for me. But you got to find a way now to have some extra money. But notice how I'm saying this. You have to work to earn more money, not to drive a faster car, not to have a better house, but so you have more money to save and invest and accelerate your wealth. It is hard. Anybody on the internet that's selling you the 6 steps to 6 figures in 6 months from my easy $997 payment is selling you a lie. It is hard work. Building wealth is not easy, but it is possible if you're willing to follow the process and stick with it, even when people make fun of you. When the first time I made $1 million in a year from my business, I was driving around in a beat down, beat up Toyota Solara. I had three different types of rims on the cars. I had no bumper on it. I had rust on the sides. My employees were driving better cars than me. It wasn't until last year, September or October 2024, that I bought finally a newer car because I was dumping money into my business. I was dumping money into my investments. And yes, it requires sacrifice. And people will make fun of you when you drive around in a beat down car. They will wonder, is this person actually doing something right, or are they secretly broke or on the verge of bankruptcy? I heard it so many times when my business was booming. But are you going to be more worried about what other people think? Or are you going to be more worried about building your own wealth? And it's hard, but if you stick with it, the path is there.
And when it comes to building wealth, obviously one of the easiest things that people can do is invest their money. You've talked about investing. Like people get confused with all the noise that's out there regarding where to put your money. What do you think is like a good framework for people to follow regarding how they can invest some of their money that will build wealth over time?
So the reason why a lot of people stay broke isn't because they make bad investments, it's because they don't invest at all. And so, what I like to tell people is think about it this way. If you're 400 pounds, you're obese, you're overweight, and now you say, I want to get in shape, it's very easy to get caught up in all of the noise. Should I do keto? Should I go carnivore? Should I go vegan? Should I do this diet? Should I do intermittent fasting? Should I be doing high intensity training? Should I be doing low intensity training? Should I be doing CrossFit? Should I be doing all these things? And now all of a sudden you're overwhelmed. Oh my God, should I be on the treadmill at 8.5 incline or 2 incline? Well, at the end of the day, look, the first thing you got to do is put down the donuts and ho hos and get on a treadmill and hit on. Once you get it on, now the next thing you do is maybe you put on an incline. Maybe you increase the speed a couple notches. Once you get there, now maybe pick up a few weights. You don't got to get worried about what is the split and this and stuff. Just pick up a few weights and put them down, right? You just start doing something. Then maybe you figure out what is a bench press. Then maybe you learn about a squat. And then maybe you get a trainer. So you work your way up. It's the same thing with investments. It's so easy now to say, what's the perfect investment? Should I try to find the next Amazon or Tesla? Should I invest in an ETF? Should I invest in an index fund? What about dividend paying stocks? What about real estate? What about cryptocurrency or startups? At the end of the day, here's what I want you to do. Start by not spending all of your money. Have money to invest. Once you have some money to invest, you just got to get started with $100. And as you get started, you dip your toes in the water, you're starting to learn and you're going to make mistakes. Here's the thing, you're going to lose, but you're not going to get to the wins until you lose. You got to get started. And there are so many simple ways to get started that I think a lot of people overlook. What if I told you that you could just invest in the American economy? You don't have to find the next Tesla, the next Nvidia, the next Amazon, the next Apple. You just invest into the American economy. Well, we know that the American economy has been resilient over the long term. Yeah, we've seen recessions. Yes, we've seen market crashes. In fact, over the last 100 years, we've seen more than one recession per decade. We've seen 16 recessions over the last 100 years. And we've seen more than two market crashes per decade. We've seen 25 bear markets over the last 100 years. A bear market is just the Wall Street term for a stock market falling by 20% or more. So, yeah, we know markets go up and down. Yeah, we know that the economy goes up and down. But if we look at the long term health of the economy, you start to see that it's kind of like this, where the markets go and the economy goes up. It's not linear, but over the long term, it is. Over the long term, it does go up despite the 2020 pandemic crash, despite the 2008 great financial crisis, despite the 2000 dot-com bubble bursting, despite all these recessions that we have seen, the economy has grown. So now, what if you could just invest in the American economy? Well, there's ways to do that. For example, there's an ETF out there, a fund that you can buy on pretty much any stock brokerage called VTI. And again, I can't tell you what to invest in. I'm just giving you examples here because I'm just a random guy on YouTube. But VTI is an ETF that will give you exposure to the total stock market. To all the companies in the stock market, VTI will give you exposure to that. Or if you want to get more granular, you can look at something like SPY, SPY, or VOO, VOO. I'm personally invested in VOO. As a disclaimer, this gives you exposure to the S&P 500. This is a group of the 500 largest companies in the stock market. And so now what you're doing is you're investing in the 500 largest companies in the stock market, which are essentially 500 of the largest companies in America. And if one of those companies, say Amazon, starts to do bad, and they're no longer one of the 500 largest companies in the stock market, the fund will kick it out and replace it with another company, and you don't have to do anything. So you're just getting exposure to the American economy. And the way that you win by doing this is not by buying a little bit of it today and then hoping that you're going to get rich next week. It's about following a strategy that I call ABB. Always be buying. You buy when markets go up, you buy when markets go down. You buy when there's a market crash, you buy when tariffs are happening and people are panicking, you buy when it's raining, you buy whether it's a Republican in the White House or Democrat in the White House. You always be buying. You set up a system every week, every 2 weeks, or every month. Money gets pulled out of your checking account and is invested into your funds, and you let the markets do their thing and you don't touch it. The only time you touch it is when markets go down. Maybe you buy a little bit more aggressively, but I just turn it on and set it and forget it, and you don't touch it for 10 or 20 or 30 years. That's a proven strategy to build wealth.
When it comes to building wealth, I think that one of the biggest mistakes people make, and also it can be overwhelming, is how do they know if they're going to have enough money? How do you think somebody can effectively determine their quote unquote enough money number so that they can live a life of wealth, but also freedom on their terms?
Yeah, I hear that a lot when people talk about, well, why would I want to invest my money so I could have $1 million when I'm 65? That's not that much money in 30 years. Like, why would I want to do that? And the first response I would say is, sure, maybe $1 million isn't enough, but $1 million is more than $0. And the trajectory that you're on right now is going to lead you to $0. So, would you rather have 1 million or zero? Would you rather have more dollars or less dollars? So, that's the first step, that it's better to have some rather than none. Now, the second question is it going to be enough? And this is going to be a matter of you and your lifestyle and your investment kind of horizon. If you know how much money you need to live your dream life, for some of you, it might be $30,000 a year. For some of you, it's going to be $3 million a year. Yeah, it just depends on what you want to do. Do you want to fly around in private jets and have a Rolls Royce, or do you want to just not have to worry about money? And you got to find what's right for you. I'm not saying one's better or worse. Find what's right for you. Once you know your number, how much money you need a year, now you work backwards. How much investments do you need to get you to that number? Now, let me tell you what traditional financial advisors do, and then I'll say what I say. Traditional financial advisors follow what's called the rule of four. Sorry, the 4% rule, which is, if I have $1 million in retirement, I can pull out 4% of that, $40,000 a year, plus adjusted for inflation each year for the rest of my years to be able to live my life. And that's what I live off of. That's the 4% rule, that you should plan to live off of 4% of your retirement. So, whatever amount of money you need, that's 4% of your total nest egg. What I like to do is think about it in terms of cash flow, because I'm not a huge fan of selling investments. I like stacking investments. And one of the things that I really like is investing for cash flow. So this might be investing in dividend paying stocks, dividend paying funds, rental properties, real estate funds that pay you with regular cash flow, whether it's every month or every 3 months or every year. It's money being deposited into my account for me investing my money. Well, I know that I can get somewhere between a 3% or an 8% return on my cash flow for my investments. With real estate, I try to aim for more of the 7% number. So, my goal is to spend less than my cash flow. So, if I invest $1 million over the course of however many years, and I can get $70,000 a year in cash income from that $1 million, I want to be able to live off of that. That way, I don't have to sell my investments and I can just live off of my cash flow. Once you get to that level, when you have cash flow exceeding your expenses, you are now free. You are really wealthy, because now you don't have to sell your investments. Your assets are there that you can pass down to your kids, your grandkids, to your religious organization, to whatever you want. And it can provide you income for the rest of your life. And if we do it correctly, it can be generally passive. Even real estate. I own a number of rental properties. My tenants don't know who I am. I don't know my tenants, but I have a good property manager and a good team that handles all the day to day work to make it possible. And I am not somebody that grew up learning this stuff. I didn't grow up with financial education. I didn't grow up with investor parents, with people telling me what to do. These are things that I went out and learned. And I'm saying this to make a point that, if you live in a first world country, you can do this. but you just got to get started, right? Baby steps. Just get on the treadmill, hit the on button, and then you work on to the next step, and then you work to the next step. It is what I call a decade of sacrifice. It's not a 6 month thing. It is a decade of sacrifice, a decade of spending less and earning more so you can invest like crazy. Because the way it works is the first couple of years, you're going to notice no change. Like, yeah, you're working hard to put this money aside, but you see no growth. Year three, you start to see a little bit. Year four, a little bit more. Year five, you start to see something like, okay, I'm starting to see what I'm working towards. Year six, now things are really starting to look a little bit brighter. You're starting to see the upside. Year seven, you start to see more. Year eight, now you start to see the compound effect of your money. Year nine, you start to see more success. In year 10, you really start to see all the efforts start to come together. And now you start living this whole new financial life because you put in that decade of working, of spending less, of investing like crazy, that we can live a life that most people really only dream of.
What's the one piece of advice you wish someone gave you when you were broke and starting off your wealth journey?
Think bigger. I mean, I was fortunate that I was never like when I didn't have money, I never thought that I was broke. I was just working for something bigger, and so I don't like those labels of like you can be anything that you want, and you got to go through a grind. I mean, I when I was trying to really figure out my journey, I was in law school working on my business full time, and I got to the point where we were doing 6 figures a year, $100,000 plus. But I was living in an apartment where my rent was around $400 a month. And the reason why it was so cheap is because I didn't have a room. I just slept on the living room floor. I just had a mattress in the hallway because I was just buying rental properties. I mean, I was just investing money. Um, and that was kind of the name of the game. And I think a lot of times we put a lot of negativity towards put in the hard work or the financial sacrifice when in reality it's just a game. Have fun with it. It was a journey. It's a part of the process. But the going back to the question of what was the question, it'd be to think bigger. So right now the company that I run is called Briefs Media. That's my full-time job. Many people know me for Minority Mindset on YouTube, but my company is Briefs Media, and we do a lot of things. Well, the main product is a financial newsletter called Market Briefs, where we break down what's happening in the financial news every day into a fun and witty and easy to read newsletter. It's completely free. You can check out Market Briefs on our site, briefs.co. But when we were starting, the funny thing was, I started the company under the name Market Briefs because I was like, oh, we're going to start this newsletter and this is going to be a business. And then I started talking about this newsletter, Market Briefs, on my YouTube channel. Well, that slowly started to grow. And now I realized, oh, like this could be more than just a newsletter. It could be like a full on media company. We could do so much more than just a newsletter. So then we turned Market Briefs into Briefs Media, and Market Briefs was just one of our products. It's still our flagship product. But from there, we started expanding beyond Market Briefs. So we had Market Briefs, and then from there, we started building more products, such as what we call Briefs Pro, which is our app where we have more financial research. So for investors that want to stay ahead of market shifts, you want to know where the money is moving, you want more data, you want more analysis about like where are potential investment opportunities. We have a team of analysts that publish that in our Briefs Pro products. And that was something that I never even would have thought of when we first started because I wasn't thinking big enough. And now I look back and I said, well, if I just would have thought a little bit bigger when we would have started, we would have got here even faster because I was thinking bigger. And now, just before this, we had a meeting with our pro staff, and we were talking about how we're still thinking too small, how we can do all these new products and we need to start planning for it right now. So we're just talking about what we're going to do in June to have a meeting where we discuss now the new build out of what we want to do. And it goes back to just thinking bigger. We are restricted based off of how big we think. And it's wild to think that, but there are people that are making a lot of money. And by a lot of money, I don't just mean 10x what you might be earning. Because I remember When I was young, I used to think, man, there's people that are making $100,000 a year. That's crazy. That's so much money. We're talking about six figures. And then you start to see, well, there's some people that are making six figures a month. Oh my God, that's crazy. And then you start to see there's people making six figures a week. And then you start to see there's people making six figures a day. And then you start to see there's people making seven figures, $1 million plus a day. Well, if you think that that's possible, you'll try to work for that. And even if you don't get it and you get 80% of the way there, you're still way further than you would have thought you would have been had you not thought big. So think big, cross out whatever your goals are, and add two zeros to it.
You brought up something that I think is kind of a myth and something that I wish I knew sooner, and I think that a lot of people wish. In that, a lot of people, they think about getting wealthy, they think about investing, but I think the thing that people miss is your biggest asset growing like thing, machine is your income. And so if you can make more money, you're going to be able to invest a lot more money. And I think sometimes that kind of gets lost in the investing conversation. Like, what are your thoughts on that?
Yeah, absolutely. Um, but it doesn't have to be that you have to be somebody working towards 10xing your income or 100xing your income. You got to know yourself. We know that the way to build wealth is to invest money consistently. That is proven. Not everybody's going to start a business. Not everybody should start a business. Not everybody wants to start a business. Everybody can work to increase their salary, to increase their income, I should say. But you also got to know yourself. Some people are completely okay working 18 hours a day and grinding because they know that this is a period of their life where they want to do that. Some people are not. Now, if you're at a point in your life and you're doing the math and you realize if I'm investing 15% of my income and I can get a 10% return, I'm not going to have enough money. Well, you have two options. You can either invest more or you can work to earn more money. And at that point, there's a limit to how much you can cut back, but there's no limit to how much you can earn. And so if you're not on the right trajectory to live the lifestyle that you want, then you're going to have to earn more money. Now, again, how do you do that? For some people, it might be starting a business or a side hustle. For most people, it's going to be figuring out how I can earn more money at my job, or get a second job, or get a new job, or get a career change. Because all those things can make a difference, or even asking for a raise. If you can figure out how you can ask your boss for an additional $1,000 a month, well, now you have more money to save, invest, and earn. Now, is it easy to ask for an additional $1,000 a month? No. But is it possible? Maybe, depending on where you are in your career and what you're doing. So, absolutely, having more income is powerful, but it's what you do with the income which is even more powerful.
Right. And I think that people um, get very like eager to want to get wealthy when they start to invest. And so, with all that said, if somebody wanted to go from 0 to 1 million in 5 to 10 years or so, like what actions do you think they would need to realistically take to do so?
If you want to have $1 million in assets in, we'll call it the next 10 years, you're going to have to put aside a lot of money unless you can see huge returns on your money, like you find the next Bitcoin, the next Amazon, and you can 10x your money in a very short period of time. But assuming that that's not possible, you're getting steady rates of returns, you're going to have to put aside a lot of money, period. I mean, there's really no other way around it. So, how are you going to find an additional $1 million? Well, are you going to make $1 million over the next 10 years? If you're making $100,000 a year, you will. But that means you have to save every single dollar to put aside $1 million. And I'm assuming essentially no growth right now because 10 years is not long enough to see really huge compounding of your wealth. So what do? You got to earn some more money and not spend it. You got to really work hard, earn more money, maybe work multiple jobs, maybe become a salesperson, maybe start a business, and you just stack the cash into investments and just stay consistent with it.
And I think the other side of that is that people feel lost and kind of helpless if they're like 40 or 50 and they have nothing saved. So like if they're at that point, like without being overly aggressive, like what should they do to make sure they at least have something when they retire?
Well, look, Your wealth is determined by three factors: TRM, time, return, and money. There's no emotion, it's just TR and M. The more time you have for your money to grow, the wealthier you're going to become. The better your rate of return, the wealthier you're going to become. The more money you invest, the wealthier you're going to become. Time, return, money. So if you're 40 or 50 years old, you don't have 45 years to invest if you're trying to retire by 65. So time is not as powerful, which leaves return and money. So we already talked about money a lot. Money means you work to invest more money. That means you spend less or you earn more, that we have more money to invest. The other is the return, your R. And this, generally, we're talking about risk versus return. The more uh, higher rate of return generally comes with higher risks. But this is where you want to manage that risk with your financial education. You want to be a little bit smarter. Maybe now you got to spend more money or time or energy studying shifts in the economy and looking for more opportunities, finding better ways to grow your money faster, maybe taking on a little bit more risk or more potential returns. Because if you don't have the T, you don't have the time, you got to make it up with the R and the M. If you don't have the money, then you got to balance that out with more time and more return, right? I mean, this it's just a balance act between the T and the R and the M.
And what do you think is like some of the biggest mistakes people make along the way when they're trying to build wealth? Is it that they pay too much attention to what the hot new stock is? Is it not saving enough money? Like, what have you found to be some of the common mistakes people make along the way?
Yeah, I mean, those are two big ones. I mean, if you get caught up in the internet culture, or which stock should I buy, it's very easy to caught up in the emotions versus real investors do a better job at putting the emotion to the side. Spending all of your money is a very easy way to stay broke. Trying to look rich when you're not is an easy way to stay broke, because Gucci and Louis Vuitton would love to keep selling you their stuff when you don't have the money for it. And Amex and Visa would love to sell you the financing to buy the Gucci and Louis Vuitton that you can't afford. Same with BMW. I mean, the average new car payment in America today is around $750 a month just for the car. Just for the car. Then you got the expensive insurance, which, by the way, has gotten extremely expensive over the last 5 years. You have the premium gas, and then you have the expensive oil changes, because the oil change on a BMW is a lot more expensive than the oil change on a Toyota. So now you're easily paying $1,000 a month just for that car, and you put $8,000 down to drive that car. When my advice would be, take the $8,000 and buy a car that you can afford with cash, and take the $1,000 a month and put that straight into your investments, pay down your debts, and invest and save that money, because that's going to compound and make you a lot wealthier than your BMW will. And then beyond that, I mean, you can get into the nitty gritty of things, but making sure that you're optimizing whatever you're doing. I mean, are you paying too much money in taxes? Um, are you investing your money in a way that's building wealth for you, or is it what your financial advisor says, and have you not audited what they're saying? But starting with the basics, right? You start with the most obvious stuff, just don't spend all of your money, then you start to make better investments, and then you optimize things.
What are your thoughts on like education? I feel like people they just end up investing way too much money into college, and then they get out and they have all this debt, or they don't use their degree, and it ends up just holding them back for years if they're not using like their degree to their advantage.
Well, education is probably the most important thing for your success. It's the backbone for your success. But what is that education? I went to college. I went to law school. I don't use my degree at all. I'm a licensed attorney, but I don't work as an attorney. Um, when I was in college, I got a ton of education, not in the classroom. I was I was running a business when I was in college. It was a party promotion business, and I learned a lot by talking to club owners, by getting screwed over, by trying to figure out how do you find promoters, and how do you find other DJs, and how do you find and build these events. But a lot of people I mean, it's everyone knows. I mean, that a lot of college degrees are not being used. I think it's like 50% of college graduates are not using their degrees a decade after graduating. I mean, the numbers speak for themselves, but that also means that there's a fraction of people that are using those degrees. So if you want to become a doctor, you want to become an accountant, you want to become an attorney, you want to become an engineer, go to college, get that degree because you have that path at the end of it. If you want to go to college to discover yourself, go on a vacation, right? It's a lot cheaper and it's a lot easier to do that. But I think it would be even better if you just travel for the world for 6 months. It'd be cheaper, a lot cheaper to do that and discover yourself and learn. And I think that's the mistake is that we encourage people to just learn, but have no kind of direction as to what it is that you're learning. I think it's a great thing to learn, but you got to know what you're learning towards. And your college or whatever you want to call it, your schooling is not the ceiling for education, that's the floor for your education. We spend so much money on education in our company, whether it be by classes, by books. Every one of our new employees has to go through a number of books that they have to read to learn about how to be a better leader, about how to be a better manager. But we also hire a bunch of consultants and people to come into the company and help teach us things, because if you can learn from somebody who's already done what you want to do, it can save you a lot of time and money and energy. So keep learning. And now with YouTube, it's become so much more accessible to learn from people that are actually doing what they teach. So yeah, I mean, I think there's a lot of uh, crap in college, but there's a lot of good in college. Just like anything else, is what are you going to make of it? Are you going to use it for crappy stuff, or are you going to use it for good stuff?
Yeah, I don't. I have just a 2 year degree, and I don't hate on college at all. I think it's obviously education is incredibly important, and people should go to college if they're able to. I just think sometimes people they end up going to a school that's like $70,000 a year. They get out, ton of debt. It can be incredibly challenging to get a job, and then you're in the hole for like the rest of your life.
Look, I'll tell you something. I don't look at somebody's when we look at so many resumes. We don't look at which college you went to. What we look at is, can you do the job that you're applying for? And that's more important to us than anything else.
When it comes to wasting money, I feel like the common things that people tend to look at is car payment. I mean, we just talked about college, mortgage, rent, but I think like there's things that get overlooked. Like, I sometimes cringe when I see how much money I've spent on Starbucks in a given month. Along those lines, are there things that you think people just tend to overlook? Like it's only like, oh, it's only $4 a month. It's $3 here that end up stacking up and creating a lot of debt.
Well, absolutely. I mean, you don't want to. They call it death by a thousand paper cuts. It's those little micro holes. But if I was going to start, I want to start where I'm going to get the biggest bang for my buck. And so, what is the biggest expense for most people is my housing cost. And so, if you start to get serious about your money and you can downsize where you live and save $500 to $1,000 a month, let's start with that. Then we look at the car. If you can downsize the car and no longer have to pay $500 a month on the car payment, there's another $500 right there. Now we start to look at the smaller, paper cuts, Starbucks and all these things. Starbucks is not the reason why people are broke. There's more to it. It's a holistic thing, and people want to argue over Starbucks because people get very triggered or personal invested into the Starbucks. But the reality is, if you're broke and you're in credit card debt, obviously you shouldn't be eating at Starbucks, drinking at Starbucks, but you also shouldn't be eating at restaurants. You definitely should not be going to Benihana's every Friday night. And you also shouldn't be going to Cancun on the vacation. And you also shouldn't be driving that car. And you probably shouldn't be living in that nice apartment or townhouse or house that you're living in. So, it's a holistic thing that you got to look at everything from a 10,000-foot view and then see what needs to be changed. Starbucks, let's call it a $5 expense. I mean, it's probably $10 now. I haven't been there in a while, but if you like it and you can afford it, go for it. If it's within your budget, if you can't afford it, don't spend money on it. If it's Starbucks or a BMW, it doesn't matter.
What's your view on credit cards? Are you a fan or not a fan?
I love credit cards, but I never carry a balance. I use credit cards as much as possible because number one, I get cash back, I get perks, I get points, I get upgrades on my flights, I get upgrades on hotels, I get upgrades on my car rentals. But I never spend money that I wouldn't normally spend. For me, whether it's a credit card or a debit card, it's just a medium of exchange. It's just a way to transact. My credit card rewards me with more things than my debit card. But you got to also understand that the reason why credit card companies are so rich is because they're charging you 25% a year in interest. And so I did the math, I think, yesterday. The average credit card debt in America, the average household with credit card debt has around $6,000 of credit card debt. And if you take $6,000 and invested it today and got a 25% return on your money, and you never invested another penny again, and you kept that $6,000 invested for 45 years, you would have over $100 million in your investment account. And then people will say, well, Jaspreet, where am I going to get a 25% return on my money? Well, Amex is doing it, Visa is doing it, Discover is doing it, MasterCard is doing it, and you're the one that's paying it if you have the credit card debt. So you got to know the game. Credit card companies are getting rich off of people not paying off their balance, but you can use the system to your advantage as long as you do it smartly.
What about the whole like die with zero thing that's come out over the last few years, where essentially you end up just giving a lot of the money away now or spending a lot of your money now so that you can enjoy it, like while you're young and you're able to do so, or when like your kids need it. Like I think that's what the idea is. But how do you feel about that?
So you're gonna spend all of your money before you die.
Yeah, I think the idea is that sometimes people wait until they're like retired to travel and to give and all that stuff, and I think the theory is why not just do it now when maybe your kids need money for a wedding or vacation, or investing in yourself now, taking the trip that you can take when you're like 40 and in peak health versus like waiting until you're 70 and maybe you won't be able to enjoy it as much.
I mean, if you can afford it, have fun. I think the key is you got to afford it. That's the most important thing for me. Is if you don't got the money for it, don't do it. If you can afford it, by all means, buy a Rolls Royce, buy a private jet, buy whatever the heck you want because you can afford it. Just make sure you can afford it.
Who else do you think are good, like what do you think are some good resources besides your company for people to read, like a book or study like investments, wealth building, etc.?
Yeah, there's a ton of people out there. You don't have to follow me if you don't like the way things I say. That's completely fine. You can go on anybody else. I would rather somebody become financially educated than say you have to watch me. You're not going to offend me if you don't like my content. For books, the first book that I read cover to cover was Rich Dad Poor Dad by Robert Kiyosaki. I loved that book. The second one was Total Money Makeover by Dave Ramsey. I loved that book. So read Rich Dad Poor Dad, read Dave Ramsey's Total Money Makeover. They're very different philosophies, which is why you should read both of them back to back. Another one that I really like that I recommend people learn about is called The Creature from Jekyll Island. It's a book about understanding the Federal Reserve Bank and how our money works. And then there's a lot of books about business um, that I would also say are very important. I mean, there's a ton of money books out there. Look, you're not going to go wrong. Go into Amazon, find the top books about money and investing, and buy 20 of them. Just seriously, if you're going to spend money on books and just start learning and read them. Please read them and then start seeing what you like more of. Maybe you're going to learn, like real estate investing, read more about real estate investing. Maybe it's stocks. Maybe it's investing in startups. Just read and then apply what you learn.
And I feel like one of the challenges with people making money, like the average person who maybe isn't making like a bunch of it, where it's like you can have more disposable income, is the ability to like delay gratification and say, you know what, I'm going to put 15% of my money away now, but I'm not going to see it for like 30 years. Like, how can people get better at delaying gratification?
Invest for cash flow because you start to get cash flow on it sooner rather than later. And Cash flow is tough. Well, I guess you still need the delayed gratification with it because the first few years of investing for cash flow, I mean, it's nothing. You're going to get peanuts. Um, but I mean, it's a discipline thing. I mean, do you want to build wealth actually, or do you want to try to get rich and then make somebody else rich?
What's the biggest like financial mistake you've ever made, and how did you learn from it?
We got another hour or 2 hours. I mean, we could go on for days about this. I've made more mistakes than I can count. I've made more mistakes than pretty much anybody that I know. I've made so many mistakes, and so if you ask me to name my biggest one, I don't even know where I would start. But I can just give you a few of them. Okay, so let's start with earning money. When I was getting started, I used to work in event planning. That was my business, was a party promoter. My first real party on my own, I had lined it up at a club, and the club got shut down the night before my event. And so I had invested all this time, effort, energy, and a little bit of money trying to build this event. Found out that the club was shut down and had to scramble to find a new place to host the event. We hosted it at a restaurant, which then got damaged, so I ended up losing a ton of money on the first one, but luckily I was able to start again. Um, my worst real estate deal ever was a third deal that I purchased. It was a nightmare deal. I made a video about it on YouTube. I bought this property because my contractor told me that this would be an easy flip or an easy way to make some money. I'm not a flipper, but he told me to flip it, we could make money. And I said, okay, I bought it. Turns out my contractor was in financial stress, and so he only wanted me to buy it so I could write him a check to do the renovations. I wrote my contractor a check. I never heard from him again. Then I found out that this property was a ticking time bomb because everything was wrong with the property. This was the only property I purchased without getting a property inspection. I spent more money in renovations and repairs on this property than I spent in buying the property. I lost a lot of money, a lot of time, and a lot of sleep on this deal. When I was starting my sock company, I used to be in e-commerce and built a sock business. I had hired a marketing company and I paid them thousands of dollars to do our marketing. And then I found out that they were a scam marketing company and I lost all of that money, but we still had a successful launch. I had a horrible accountant because they were cheap, which is why I hired them. So I didn't pay them a lot of money every single month. They were, a low cost, but they ended up costing me a ton of money in penalty, fines, and stress. I got a call one January from my accountant, my old one, where they said, Jaspreet, I need you to do me a favor, send $18,000 to the state of Michigan by the end of the day. And please send an additional $100,000 to the IRS by the end of the day as well, because we made some miscalculations. Oh, by the way, you also have to pay penalties, fines, and interest on this as well. So then I paid those fees and I proceeded to fire the accountant and found a good accountant. I've had horrible property managers. I've had bad title companies. I've had bad account attorneys. I mean, I've also made bad business decisions where I've lost hundreds of thousands of dollars on single business decisions because I made a dumb mistake because I didn't fire people fast enough. I mean, I have made every mistake because I didn't grow up learning this stuff. I learned through my mistakes. I could write books and novels about the mistakes that I made.
If there was like a through line, like looking back, maybe what would have, maybe what caused some of these mistakes? Do you think it was just not vetting people enough? Was it being too eager to get a deal done? Like, what do you think it was?
It was a mix of everything. A lot of them, I guess, yeah, would be not hiring strict enough, but you don't know what you don't know. And you got to learn what you don't know. And the way you learn is by screwing up. So, I think back and I'm not upset that I made any of these mistakes because they taught me something each and every time. And so embrace the mistakes, roll with the punches, and just get ready to fight again.
Is there anything else you'd like to add to our conversation that we haven't covered as it relates to money myths, how to invest, how to build wealth, etc.?
Just get started. Just get started. This is my advice for anybody. Just get started. It is possible. It's possible no matter where you are, no matter how tough the situation is. You might not feel like it's possible where you are today, but start with 25 bucks, then make it $100, then make it $500, then make it $1,000. Little bite-sized pieces add up. You can move mountains if you start by picking up small rocks. but you got to start by picking up that one rock and take small steps forward. I know it can be overwhelming, but stick with it. And you will be able to see that success and you'll be able to surprise yourself if you stick with it. The time is going to pass. You might as well put in the effort.
Jaspreet, thank you so much for coming back on the podcast. I think people are going to get a lot of value out of this conversation.
Hey, thank you, brother. Thank you for having me on. It was really a pleasure to be on with you.